Hey guys, how's it going? My name is Brendan and welcome back to the channel. If you guys are new here, it's great to have you, and today we have some very big news to go over, as the United States has officially announced that Bitcoin will meet national banking, and this entails a ton of information. So today we're going to be going over the good, the bad, and the ugly of everything that this entails and how this can actually impact the world of cryptocurrency as we know it. So in order to do that, we're going to be taking a look at how this has impacted other markets in the past in order to understand how this could impact cryptocurrency moving into the future, because this is a ton of information. There's going to be a ton of jargon, and I'm going to be doing my best to make as much sense of this and make this, I guess, as easy to understand and digest as possible. So with that being said, let's go ahead and dive on into this. Now, this was announced late yesterday, early today, and as Bitcoin meets banking as the U.S. bank regulator permits cryptocurrency custody. Now, this was from the OCC in the United States, and this is extremely significant. And what I want to go through here is some of the main articles of what they talk about and some of the direct quotes that were mentioned in this hearing and in this regulation process. So basically what has happened is that cryptocurrency has become so big that banks and the government can no longer ignore it. It has become such a big sphere of influence that the very thing that it is supposed to take over is now saying, if you can't beat them, join them. I mean, banks are now having custody and willing to work with cryptocurrency. The catch here is that, I'm sure you guys are aware, cryptocurrency and Bitcoin is done on a blockchain. So in order for them to manage your cryptocurrency and to deal with your cryptocurrency, they are going to need their customers' private keys. Now, this is something that, again, a lot of people who cryptocurrency just goes right over their head, they're going to do this and not even know what they're doing. But for those of you guys who know cryptocurrency, the private key is the one thing that you don't want to give away. Now, maybe you can make another private key and let your bank use that. You know, I don't trust anyone with my private key. So for this being put out there as, of all people, the bank having your private key, it's interesting because the entire point of a cryptocurrency was to keep your money out of the banks, and now the banks want your private key for cryptocurrency. One of the things that they touch on in here is the difference between fiat currencies and cryptocurrencies. They talk about how one is completely virtual on a blockchain and the other one has a physical touch to it that you can actually hold in your hand, and also a digital version that is a little bit different from cryptocurrency, that is therefore more centralized. So one of the things I want to talk about here is one of the direct quotes from Brian P. Brooks. He said, "This opinion clarifies that banks can continue satisfying their customers' needs for safeguarding their most valuable assets, which today for tens of millions of Americans includes cryptocurrency." This is big. The fact that they are willing to come out and on record acknowledge this and say this, that this is one of I guess America's most valuable assets, and tens of millions of Americans use this and are dealing with this, and that this number is growing to the point of we have to acknowledge this and get this out here right now. That is huge. Again, big news for me. Big news for anyone that likes cryptocurrency, but this could have some negative impacts as well that I want to go over. One of the things that they talk about here, and one of the last paragraphs that I want to read while we're going through this, is that the continuation of this, it says, "And while there are differences between fiat and cryptocurrency, the need to protect one's national and financial wealth is the same. Currently, those holding cryptocurrency can keep their cryptocurrency in a digital wallet with an exchange or for higher net worth individuals, a trust company. The OCC's statement is incredibly helpful in providing assurances to banks that they can pursue this line of cryptocurrency custodial services." This is another I don't know, I don't want to say too jargony, but basically what this means is that cryptocurrency services, cryptocurrency businesses, they are now going to get more attention and they're going to be able to get worked with a little bit more. In the past, there was some banks and some providers and some even countries that were saying, if you are anything to do with cryptocurrency or blockchain, we're not going to work with you, we're not going to finance you, you can't get a loan from us, and they made it very difficult. what this is pretty much essentially doing is that the pursuit of cryptocurrency businesses is not going to be made a pain in your side. You're going to be able to work with banks for this, as banks are now going to be able to work with you. And as I'm sure, again, the regulation is still continuing to happen as I'm making this video. This is ultimately a good sign if you want to start any kind of cryptocurrency business, in my opinion. Now, let's talk about, and again, I'll have this linked in the in the description down below so that people can read through this entire thing. The problem here becomes is that when U.S. or even national or, whatever you want to call it, banks get a hold of something, they tend to manipulate it. The United States charges JP Morgan metal traders over alleged market manipulation. I'm sure you guys have remembered this. They manipulated the price of gold, silver, platinum, and even more than that. So they did this for almost 8 years without almost going unnoticed, manipulating the metals market. And that's an extremely big market. Not just gold, not just silver, not just platinum. But we're talking like 4 or 5 separate precious metals, the entire market manipulating it. Not only did that happen, but the Wall Street Journal comes out and says big banks are fined by the EU for foreign exchange market misconduct. You even have Forex being a part of this from banks. So if the Forex markets are able to be manipulated and the precious metals markets are able to be manipulated, what makes you think that these big banks can't come in and go over to a market cap of $300 billion and manipulate it? Now, one of the biggest arguments that people have said for cryptocurrency is that, it's money laundering this and money laundering out. One of the things that they talk about in this actual article, if we can pull it back up here, is that they have discovered that cryptocurrency is actually used less for money laundering than they even realize. And in fact, fiat is used several times more than cryptocurrency in money laundering and illegal activities, which is what they talk about right in here. So if we go over and we look and we say, okay, well, that's good to know, but like, what is that? What exactly does this mean? Well, it's estimated that the amount of money laundered globally in 1 year is between 2 and 5% of the global GDP, meaning anywhere between $800 billion and $2 trillion currently, and the United States is laundered. This blows the argument away that cryptocurrency and Bitcoin and all this stuff is just money laundering and this and that. The United States has officially come out on record and said this is not the case. We've discovered that the US fiat dollar is used more for this stuff. And in fact, if you were to take the entire market cap of every single cryptocurrency, it'd be less than $300 billion. And that would still be several times less than what is laundered in the US dollar every single year. Again, very big for the United States to come out and admit something like this. It's almost strange that they're willing to admit that their own fiat currency is getting laundered several times more than the very thing that they said was the main cause of laundering. So I see this as a big win for cryptocurrency in general. So as this continues, I think the one thing that we have to be careful about is how big banks are going to attempt to manipulate the price of cryptocurrency. Maybe that's suppress it, maybe that's rip it, maybe that's just make it not make any sense and make people frustrated with it so that the banks can continue to succeed. But it's gotten to the point where banks have to get their hands on it, and because of that, ultimately, for the lower side or for the upper side, it's going to stick around. Now that the banks have control of it, or not control of it, but now that the banks are legally allowed to hold it and deal with it, they're not going to let their assets tank. The banking system makes sure that they take care of themselves, especially in a year like this one. Above all else, these banks are doing very good for themselves. And so it's almost weird that banks are hedging themselves with this, but that should tell you something about what's really going on, in my opinion, that banks are willing to hedge the very thing that they are there for. And that's what I see cryptocurrency as a hedge against fiat. So again, very, very interesting. I wouldn't be surprised if some form of manipulation comes in here. But this is going to be a big process. So hopefully this video made some sense for you guys. Hopefully this was a great episode of Crypto News. If you guys did enjoy it, all that I ask is that you guys drop a like and a comment. Ask me any questions that you guys might have in the comment section down below, and share it with a friend that might need to hear something like this. So once again, guys, I appreciate all of you guys for watching, but until next time, I will see you in the next video.